$1 trillion is holding an entire market hostage. One man won't move off that number. Sam Altman. Whether he holds the line decides when every other software company gets to go public. Here's what most investors missed last month. OpenAI already filed confidentially. Draft IPO documents are waiting with the SEC. The road was clear. Bankers were ready. This was supposed to be the year of the mega IPO. Then OpenAI blinked. Reports now say they're weighing a delay to 2027. Three things happen depending on what they decide. One of them costs OpenAI the most. One hands their biggest rival the keys to the entire market. And one of them nobody's talking about. Let me show you which is which. Hey, welcome to New Stock Signals. I'm Max, the digital twin of Bill Smith, founder of Renaissance Capital, which has analyzed more than 11,000 IPOs. Bill personally researches and writes every video script himself. I hope you enjoy. He reads every comment, so be sure to share your thoughts below. Nothing in this video constitutes personalized investment advice. Always consult your own financial advisor before making investment decisions. Why should you care about the timing of one IPO? Because timing is never just a date. It's a signal. When the biggest name waits, the whole pipeline waits. Bankers told both OpenAI and Anthropic the same thing. Whoever lists first defines the industry. The comparables, the metrics, the valuation math, everyone else gets measured against. So this isn't gossip about Sam Altman's ego. This is about who sets the price of AI for the public market and whether the door opens for the dozens of tech companies lined up behind them. Here's what I'll give you. 3 scenarios. The real economics behind each. And most importantly, how a serious investor should think about a delay like this. Not the headline, the mechanics underneath it. Let me step back. I've watched this pattern for over 3 decades. First mover advantage in IPOs is real, and it's underrated. Think about it like this. The first company to go public in a new category writes the rulebook. Investors have nothing to compare it to, so it becomes the comparison. Every rival that follows has to either fit that frame or explain why they're different. We saw it with cloud companies. We saw it with the early internet. The company that defines the category captures the premium. But there's a second half to that rule most people forget. Going first also means going blind. You absorb the market's first reaction. You take the hit if sentiment is wrong. The second company gets to watch, learn, and adjust. First mover is an advantage. It's not a guarantee. Hold that idea. It's the key to everything that follows. Here's the reality. This isn't really a story about whether OpenAI delays. It's a story about what a delay reveals. Let me walk you through the 3 paths. Scenario A, OpenAI waits. Anthropic goes first. If OpenAI pushes to 2027, it hands Anthropic the first mover crown. Anthropic is already ahead where it counts. Anthropic raised funding at a $965 billion valuation in late spring, passing OpenAI's private valuation for the first time. A public listing would let that lead widen. Public stock helps them recruit. It helps them acquire companies. Regular financial disclosures also build enterprise trust. Reports now suggest Anthropic could list as early as October. That's not a company reacting to a rival. That's a company racing to define the field. Scenario B, OpenAI waits, and so does Anthropic. This is the one that should concern you. If OpenAI delays and the market reads it as fear about AI economics or inflated valuations, that fear spreads. Other companies pause. The whole pipeline freezes. And here's the uncomfortable truth. If OpenAI delays to 2027, it may cost them the most because they have the most to lose. They're burning cash today, and they need public markets to fund it. Internal projections reportedly point to losses of around $14 billion in 2026 alone, with profitability not expected until roughly 2030. There's also a clock ticking. $35 billion of Amazon's commitment is tied to OpenAI going public or reaching AGI before the end of 2028. A long delay carries a real cost. Waiting to protect a valuation while you're burning cash is a dangerous game. Scenario C, OpenAI doesn't delay but doesn't hit $1 trillion. This is the scenario nobody's pricing in. Altman is reportedly holding out for a $1 trillion valuation. He's told executives anything below that is off the table. But there's a version where OpenAI stops overthinking, lists this year, and prices at something more moderate, painful for the ego. Possibly the smart move. A real listing at a fair price beats a paper trillion the market won't defend. Because we just watched what happens when a mega IPO meets a volatile market. SpaceX went public in June, opened near $150, climbed past $225, then fell back to roughly $153 within about 2 weeks. That round trip is exactly why OpenAI is nervous. That's the key insight. A delay isn't discipline or weakness on its own. It's both, depending on which scenario you're watching. Your job isn't to guess the date, it's to read which story the market is telling. Now here's the guide that 11,000 IPOs gives you. First, stop watching the calendar. Start watching the signal. The date OpenAI lists tells you almost nothing. Why they list or wait tells you everything. If they wait to chase a bigger number in a stronger market, that's pricing discipline. That's a company negotiating from strength. If they wait because the finances can't survive daylight, that's a warning. Same action, opposite meaning. Second, separate the sequence from the substance. Don't get seduced by who goes first. The order of the IPOs is a headline. The durability of the business is the investment. One analyst framed it well. The better play is to value these companies based on their moat, not their timing, on whether the product holds its ground, not on who rings the bell first. Ask the boring questions. What are the real margins? Is the cash burn narrowing or widening? Are enterprise customers paying and staying? Third, don't confuse a big valuation with a good investment. Anthropic at $965 billion. OpenAI at $852 billion. A $1 trillion target. These numbers are hypnotic. They make you feel like you're watching history. But a valuation is a price. It is not a verdict. The best businesses in the world have been terrible investments at the wrong price, and mediocre businesses have made fortunes when bought cheap. The number in the headline is what you pay. The business underneath is what you own. Never confuse the two. Now let me be fair to the other side. You could argue OpenAI is being smart. Wait for calmer markets. Get the $1 trillion valuation. Reward patience. That's a legitimate case. One view holds that OpenAI's delay preserves Altman's valuation floor and hands the pricing benchmark to Anthropic. A strategic trade, not a panic. And here's where I'll be honest with you. I don't know which scenario wins. Nobody does. These plans aren't set in stone. Discussions are ongoing, and OpenAI's timeline is still subject to change. Anyone telling you they know the exact date is selling you certainty that doesn't exist. What I can tell you is how to think about it. Watch the reason, not the date. Weigh the moat, not the timing. Respect the price, not just the story. That's the discipline. And it works whether OpenAI lists in October or waits until 2027. So let's bring it together. $1 trillion number is holding a market in suspense. 3 scenarios sit downstream of it. And the winner isn't decided by who goes first. It's decided by which business earns its valuation once the noise fades. Here's what really matters. You don't need to predict OpenAI's IPO date to invest well. You need a framework that survives whatever they decide. Read the signal, not the headline. The moat matters more than who rings the bell first. And never let a big number do your thinking for you. If this helped you see past the headline, subscribe so you're ready when these companies finally move. And if you want the full framework Bill uses to evaluate every IPO, the muscle method, and the AI IPO scorecard, it's all in his new book, 35 years and 11,000 IPOs distilled into one system. Pre-orders are linked below. This isn't about chasing the next big name. It's about building a system that works when the excitement burns off. The date is a headline. The business is the investment. Never confuse the two.